Welcome to this flight of the Retail Pilot. I'm Ken Pilot, former CEO and current brand advisor, investor, and board member. I'm thrilled to share with you some of the insights from retail's leaders and legends, as well as my perspective on retail today. This podcast is sponsored by the following. Predict Spring is a global point-of-sale platform live in 22 countries. The platform includes mobile POS, endless aisle, fulfillment, inventory management, and clienteling, creating a true omni experience for customers and associates. Predict Spring powers Suit Supply, Converse, Lovesac, Decium, Janie and Jack, and Bouclair. Welcome back to the Retail Pilot. And today I have a good friend and special guest, Dana Telsey, CEO and Chief Research Officer of Telsey Advisory Group, which was founded in 2006 and has grown to be a leading equity research, trade execution, investment banking, and consulting firm focusing on the consumer space. She has followed over 100 companies during her 30-plus year career. From 1995 to 2006, she was at Bear Stearns, covering the retail sector as Senior Managing Director, and prior to that was the retail analyst at CJ Lawrence and Vice President of the Barron Asset Fund at Barron Capital, Inc. Dana is a regular guest analyst on both CNN and CNBC and has received numerous accolades that include, but are certainly not limited to, Rethink Retail Top Retail Experts for the last 5 years, Barron's 100 Most Influential Women in U.S. Finance for the last 5 years, Crain's New York 2022 List of Notable Women on Wall Street, where Daily Burns Communication Group 25 Most Inspirational Women Business, and Thomson Reuters Award for #1 stock picker for multi-line retail. Dana, I'm exhausted. You must be doing all of that. Welcome to the podcast.
Thank you. Thank you so much for having me, Ken. We've known each other a long time, and I'm looking forward to our conversation. Thank you so much.
Yeah, I was thinking about how long we've known each other, but there was something about 30 years in here. So everyone knows we're both over 30, but I do remember. I want to see if you remember. Do you remember where we met?
Was it at outlet store, at the outlet centers? You were at one of the value retail outlet conferences from back in the day when outlets and factory outlets were just beginning?
Yes, it was. I think somehow Steve Tanger had an event, a dinner, and I was seated next to you, and that's where we met.
Exactly. And I think you were with the Gap back in that day, and we were talking about how many outlets could there be. And then you look at Tanger today, and we were just talking about it. You had Steve Yalof on, who runs Tanger now, and the improvements and enhancements they've made to the whole concept.
Yeah, that's the outlet space we'll talk about a little bit, but it's really transitioned to something that was so remote to something now that's so much part of really most people's shopping cycle.
Mm-hmm. Exactly.
Dana, it's been an amazing journey. How did you even get into the retail space? Give us a little background, a little color on your past.
Sure. So I grew up in Manhattan. I mean, I'm the type of person that New York is where it happens. My family had a bookstore on 51st and Madison. I was cash register number 3, while my grandfather was cash register number 1, and my mom was cash register number 2. And it so happened where we lived on the Upper East Side, there's a man who walked their dog with my sister who had a dog named Ron Barron. And he was starting his firm, Barron Capital. I was walking the dog with my sister and Ron one day because we thought of him as the Cocker Spaniel man. And he said, "What are you doing this summer in between summers and college?" And I said, "I don't know. Why?" Because I'm going to start a company. Do you want to work there? I said, "I don't even know what you do. You're just the Cocker Spaniel man." And he goes, "Oh, I'm in the stock market." So couldn't be more fortunate to have worked for Ron, summers in college and 7 years after that. And he taught me how you analyze stocks, how you look at businesses, how you look at valuation, marrying the quantitative with qualitative. I'm a huge believer in mentors. And I couldn't have had a better mentor than Ron Barron, who I am still very close to today.
You must own a lot of Tesla stock. I know Ron loves that company.
Yes, he does.
But then you went Bear Stearns. You were there for a while working with John Howard, I believe.
Yep. So then what happened is I'd been at Ron's for 7 years, and sometimes you can't live where you grow up. So I interviewed for a job on the sell side, went to CJ Lawrence. After 2 years, they finally said, "Okay, we'll give you a shot," because a lot of times people from the buy side on Wall Street, how do you market on the sell side? Well, I'm a huge believer in, I don't believe in the word no. So I went around to everyone and said, "How do you become this institutional investor ranked analyst?" They said, "Oh, you won't be the institutional investor ranked analyst. Everyone's been doing it for a long time. Yeah. So within 11 months, I became an institutional investor ranked analyst, was at CJ for 3 years before I got acquired by Deutsche Bank. Not as comfortable at Deutsche Bank, so talked to all the firms and basically went to Bear. And what Bear offered me is big umbrella and the opportunity to grow, opportunity to expand the coverage I had, opportunity to hire people. And it was a fantastic experience. I was there from 94 to 2006 before Bear went away in 2008. And what I'm most proud of today, one of the things at TAG, Telsey Advisory Group, it's, we're 19 years old now. Of our 32 people in the company, 4 of them I've worked with for over 20 years from Bear Stearns. And then we have around 17 people who have been at TAG for over 12 years. So I believe in teamwork makes the dream work. And I can't be more proud of the journey I've been on, both of people who work with me at TAG and all the people who've been in my group over the years, and to see the success they've had.
Tell us a little bit more about TAG, because there are different groups within TAG. I want to know more how it operates and what it consists of.
Yep. So we have 4 different business lines. We have the research business line, which is the bulk of it, where we follow everything consumer. And so, yes, we write on public companies and we do their earnings reviews, previews, industry reports of what's happening. But we also speak to private companies, and we have a tangential reach across to retail real estate too. Well, we don't cover retail real estate companies in this omni-channel world we live in. So we cover everything from soft lines with apparel and apparel manufacturing, luxury, cosmetics, off-price department stores, with hard lines of home, consumer electronics, grocery, discounters, and dollar stores. And overarching it is new economy, because however the consumer converts, we want to be there. That's the research arm. We have our capital markets arm, which is banking in both equity capital markets and debt capital markets. And we also have a consulting arm of the business where we'll consult to all types of companies. It could be overseas companies coming to the US. It could be other types of businesses. It's been financial services. It's been media companies about how you brand. And then we have asset management. Around 8 years ago, we started the Telsey Consumer Fund, and a former client runs the Telsey Consumer Fund. It is not located in the same office as we're located in. There's a Chinese wall between it, but given the brand that we've built over the years, there's the Telsey Consumer Fund, who has performance been very good. If anyone is interested, let me know. Happy for materials to be sent to you. And Vince Sullivan is the co-founder, chief investment officer, and portfolio manager of Telsey Consumer Fund. So those are the lines of business. Super excited about the opportunities. And even though my real initials are DLT, my initials are BMF, because I'm about better, more, and faster. And to me, there is no end. It's only excitement every day. Because when I call our CFO, COO every day when I walk in the morning after our morning meeting, I said, how are we going to win today? And Ken, today, I said to him, we're winning by me joining you on your pilot podcast.
I love it. I'm curious, from the advisory side, what are companies most interested in, or where do you see them asking or needing the most help?
Competitive dynamics. How do they brand? How do they gain awareness? What is the physical footprint used for? What's the online footprint used for? What types of venues in retail real estate make most sense for them? And what does the competitive dynamics look like? That's typically what we're talking about. And it's for overseas companies, and it's also for domestic companies, and for companies that are outside of the consumer spectrum that you wouldn't think that, we have a line with. But I'll give you an example. We spoke before a steel company, a big steel company, and I have no idea about steel. It's not my world. But you know what? They want to understand, how do brands make themselves relevant? How do they gain awareness? So it spans the spectrum of what we're talking about in the advisory world.
And would that be not only for brands that want to come to the U.S. or U.S. brands that want to go abroad, but it could be for either country's brands to become better in place?
And it's existing in the U.S. It's private companies who are small. How do you see other small companies growing their brands? It's what are you seeing best in class? What are the attributes of a CEO, and what do you see their skill sets needing to be? So it's across the journey. But you know where all this comes from? Yes, it comes from doing a presentation, but then the talking and just the Q&A back and forth is what really makes everyone get to the heart of the matter and makes it value add.
Super cool. Going into the new year, we've got a lot of stuff going on. I mean, a lot of stuff going on. What are you most excited about from a retail perspective for 2025? What are the big opportunities out there?
I think there's a lot of big opportunities. I think one of the things we're seeing is a lot of retailers and brands increasing their investment in marketing. I think the marketing spectrum, particularly when it relates to social, has made personalization more effective. It's made inventory management more agile, the ability to drive full price sales, the ability to curate. And I'm seeing that word curation. You can curate both from the retailer and brand perspective. You can curate from a retail real estate perspective. Making curation smarter is certainly key. There's concerns out there. Tariffs, inflation, interest rates. What are we going to get with the uncertainty and chaos that we've had and looks like we'll continue to have? So there's definitely uncertainty out there. But what makes the consumer space so exciting lately is the speed and the agility about which companies react. I've always had this framework of concept, execution, and management is what makes brands and retailers successful. Concepts about innovation and newness to drive repeat customers. Execution is about seamless and speed. I think management helps to develop their growth strategy and adjust it based upon data. So talking to companies about how you're innovating, what are you doing to make things seamless, and what do you use your data for? I think those are the questions that you ask that helps to define what's the growth path for the future.
And being the top stock picker that you've always been, if you had to take what you're excited about and apply it to companies that are doing well, who are the top 3 companies that are doing it well, that are really lining up to have a good year?
I mean, Birkenstock. Who would have thought that a 250-year-old company is younger today than what it had been? Not a lot of stores, full price sales, continuing to expand their assortment and their selection. That's interesting, what Birkenstock is doing. You know what else? Look at what Warby Parker's doing. The combination of having opticians in their stores to drive attachment sales, it's driving more traffic. It seems to be working. You got to believe that what Walmart is doing and making their company, it's not the Walmart of 60 years ago. It's the Walmart of this 21st century. And they're continuing to gain more share. And I have other companies that are doing things well. What Fran Horowitz has done at Abercrombie and Fitch is stunning. It's basically taken an existing brand and gotten a new customer base with a new assortment. You look at Lululemon, who's accelerating their product newness. You saw it develop in this holiday season. It feels like it can develop more. And what I'm watching as we go through 25, are we going to have a step up in luxury after the weakness that we've seen? Burberry, this feels a little better. We're going to get LVMH's results before. We're still not seeing the Chinese consumer come back and travel, but you're seeing a little bit of local spend. And tell me, how many times have you taken a picture, Ken, of those LV trunks on 57th Street?
Maybe only once or twice, but I know I'm in the minority. It's pretty crazy, the marketing that they're doing. Yeah, it's interesting. You pick some companies that I would agree are doing it well. I think Birkenstock in particular, their collaborations, making themselves relevant, redefining who they are. And also they've got great sourcing, right? They'll be able to avoid some of that tariff headwind out there based on their production in Germany, until
and Portugal for the cork. Yeah.
Right. Until Germany gets hit with a tariff because somebody gets upset that he doesn't like how many German cars are coming into the country and so on and so forth. And my friend Dave Gahan is there, and he's such a good guy.
A great guy who's really taking the brand and expanding it in a thoughtful way to deliver full price sales.
Yes.
To me, the vision that they have, he's part of the eminent success of what's delivering these increases.
Agreed. One thing I would say about Lululemon, I think that there's so much pressure in the athleisure space, especially coming with Aloe, who looks so strong, and Warby, that they look so strong. And I think a lot of the growth really now is coming from outside of the country for Lulu, not necessarily in the U.S. So I'll be curious to see how Lulu continues. I do think their stores are tired. They've really got to put some money back in the stores to make that shopping experience a little bit better, but they do win with great product.
Yep. I recently was at their Century City store in Los Angeles. I was last week at their Scottsdale store. The way they've merchandised and upgraded these new stores, it's certainly a bit different. And I also think one of the things to watch from Lulu, look at the partnership that they've developed with Fanatics. I think there's going to be other sources of revenue opportunity for them in addition to international growth that you mentioned.
So if 2024 was the year of Abercrombie and Fitch, will 2025 be the year or the return for Gap?
Well, look Richard Dixon, he's got it started a little bit. He and Zach Posen have made it more relevant. I'm sure you, like I, have seen their store on, was it at 20th and 5th or whatever? A smaller box, more exciting. But like you said, you need to invest in a lot of stores to make it relevant. It seems like Gap and Old Navy certainly have more poise and more awareness. 1/4 of positive comps at Athleta against easy comps. You need more of it. Their exposure to China, they continue to lessen, but it is becoming more relevant. It is becoming more top of mind by all age groups. I think the one that people are going to watch very closely in 2025, Nike. Is Nike going to have any improvement under Elliott Hill? I don't know, Elliott. Do you?
I don't. It's funny. The athletic shoe business, sneakers, has been a category that's just sort of fascinated me over the past year. The amount of energy, the new players from Hoka, they're not new, but how they're flexing. You've got Hoka, you've got On Cloud, Brooks, New Balance, all of these Skechers. Skechers is going to be an athletic brand. There is a lot of competition for the feet.
Right. It's a lot of competition for the feet. And I think one of the elements is, look what people are wearing to work these days. When I was just at this ICR conference in Florida, you look at people's feet, there's more casual and comfort shoes and sneakers than there is traditional dress shoes.
It'll be interesting to see how Nike does come back. Purely an amazing brand. You would have thought there would have been some good tailwinds following the Olympics, and they'll have to follow up on that. But they've got to figure out their place with the customer, from appealing to the athlete to something that's truly comfortable, that's maybe non-athletic, and how they win with both.
Right.
And how they want to be positioned with direct-to-consumer and wholesale. They kind of waffled between the two, and it looks like they'll find a better landing place than they were in before.
I've always said, to be at the top of the retail spectrum, you need to rejuvenate, you need to re-merchandise, and you need to remodel. They need to reinvent also, but there's work to be done there. I never think that's within a 12-month time period.
You mentioned before tariffs. I think there's a lot of concern. I don't know how much of it's bluster versus how much of it's going to be a reality. I wouldn't be surprised if Trump ended up lowering tariffs on China, only because he would just like to say he did that because of what else he did. I think it's got a lot of companies scrambling for where their production should be. What are your thoughts on the impact of tariffs for the year, both on the companies and on the consumer?
I think overall companies have dealt with it once before, and you're exactly right. The uncertainty, the chaos, what does it mean? I think the focus on reducing exposure to China is top of mind for all the retailers. Retailers that you would normally think, or it was a big percentage, a lot of them are below 10% now. Some of the footwear companies like Steve Madden still have work to do to bring down the percentage. But the ultimate thing is, we can't pass on price increases to the consumer. And what tariffs does, it does increase prices. So at the end of the day, I think that's a concern that every company is going to have to work with. I think what allows them, frankly, to increase prices in some instances, with the umbrella out there of product newness and innovation, companies are taking a higher price on their newest items, whether it's more technologies in them, whether it's more functionality, better fabrics. That's what gives them kind of an umbrella to help manage. But it is not in any retailer's best interest, even the higher end, to raise prices because of tariffs. And I think whether it's South America, whether it is even Africa that we've seen companies going to, the impact of the U.S. is the labor costs are too high. And we just don't have the sophistication and the expertise. My first trip to China, I'll remember one time, one of the sourcing and manufacturing experts I was with said, here, I'm showing you this factory. There's no China like China. Hard to replicate that expertise in manufacturing.
With China struggling economically now, it'll be interesting to see if there are more tariffs put in place, how much of those tariffs the Chinese will be able to absorb versus having us pass it on to the customer. I think the first go round, we saw a bit of that. I just don't know how much more they can take, but they can't afford to continue to lose business.
Exactly. And frankly, look at the deportation of immigrants. Yesterday I was downtown. I saw 2 or 3 restaurants close because of the deportation, and they don't know when they're reopening again. That's a headwind too.
Yeah. A lot to happen in that space over the next few months, I would say, based on the speed of what we see happening. Let's talk a little bit about tech has become so important now as a key, certainly as a key arm of a company, key initiative. What are you seeing out there in technology? We're hearing a lot about AI, but specifically, what are you seeing companies begin to lean into?
I think, first of all, for retailers, they're always late. I think they're investing in it in a bigger way now. A lot of it is coming from the big companies like what a Walmart and a Target given their and Amazon dollars that they have, and everyone else follows suit. You mentioned AI, generative AI with hyper-personalized shopping experiences. Content creation is definitely top of mind. The fact that it offers the big retailers the opportunity to streamline processes, the small businesses to introduce capabilities that were only previously available to larger companies. So it needs to be integrated into business and data points and tailored to specific tasks. I think we're in the early innings. Everyone talks about what it could be, like we hear about, for example, the content that's of descriptions of products on websites. I hear about it through retail real estate in terms of how you provide adjacencies. So as it becomes ubiquitous, I think what matters is how retailers engineer it and deploy it in a way that adds value to customers.
Yeah, it's interesting. You take a look at someone like Placer AI that really helps, I think, better explain where customers are shopping and how important adjacencies are. And that's almost become a standard for real estate. If you're not using Placer, showing Placer data on the customer, any tenant would ask a landlord to go back and provide them that data. So that's become almost a non-negotiable there. On the retail and brand side, so much AI being used to improve the customer experience online. A little less happening in stores. There's upgrades to point of sale. There's RFID, which we've been talking about
For a while.
Forever. But those are some of the bigger changes that need to happen if they haven't happened already.
Totally agree.
Which retailers, you mentioned Walmart, which retailers or brands do you see that are really stepping up their investment in the areas of technology and seeing it pay dividends for them?
Besides the big guys like the Targets, the Krogers, the Amazons, the Walmarts, Victoria's Secret is investing in some of the AI, even in the dressing rooms and for virtual fittings and try-ons. That's something you wouldn't have expected from a brand that's working to re-engineer itself. I look at private companies like a Reformation, for example, who's doing some really interesting things with supply chain, and they've made a difference. I think we're still in the early innings, but everyone is trying because they can't afford to miss out.
It's interesting. One of the big trends, and it's been a big trend for a while, certainly in Asia, is shoppable live stream and video shopping. We don't see much of that. Do you hear much about it? Is there much discussion in your circles around how do we bring this energy to online shopping that really isn't there?
It's interesting. Around 6 months ago, I began to hear about it. Then when I kept asking about it, companies weren't saying anything. So either there's work in progress, but it's not at the forefront of discussion. Generative AI is much more at the forefront of discussion, in addition to social media and what it could do in terms of capturing more of the Gen Zs.
Any platforms in particular that you've seen that are just reshaping the way you look at retail? Anything that's yes, there's generative AI, there's Perplexity and ChatGPT, but anything specifically out there that you're seeing that's a wow?
The only thing that keeps coming back and back that we continue to watch more closely to see where brand heat is developing, TikTok. TikTok has become not a nice to look at, but a must look at in seeing where brand heat lies.
Yeah, it's interesting when you think about the importance of social and where it plays not only for the customer, but how it plays for social commerce. It really is growing quickly. I don't know how much you've bought off of like Reels or Instagram. I'm awful. I buy those. And I always say I'm not going to buy anymore because it doesn't always work all that well, but it looks advertised so cool. The marketing is so good, but the social media marketing, critically important. What about retail media networks? We hear a lot about that, which has some applications in some places. Who is using it or who's doing that well?
I'm hearing more about companies investing in it, but I don't have anyone who's been able to give, it's increased my sales, it's added to my loyalty members. I think it's still more at the early innings. I think their ability to look at the conversion from social media channels is much more effective for them than their own retail media networks. Because look at Ulta did it. And yet you're still hearing about store sales than you are hearing about their own UB media.
I heard of an interesting collaboration. I had Jennifer Hyman on the show about a month ago. And I was asking, they retailed Rent the Runway, kind of moved away from physical retail. And I was like, what would it take for you to do physical retail again? And she said, wow, how about a pop-up shop or shop and shop inside of Ulta?
Interesting.
I'd invest in that.
I think pop-up shops are effective because it's a surprise and it's a wow. Yesterday, I was walking downtown and all of a sudden there's this long line and you saw Skims bags being carried. And this is on Lafayette Street. I knew there was no Skims store there, but guess what? They did a pop-up there. Could be for 2 days. And it's amazing that people know because it goes viral on social and they bring their own crowds. You're seeing this with restaurants too, even with grocery stores in terms of like that Erewhon on the West Coast. It's amazing.
Yeah, I think looking at physical retail, the idea of also smaller stores, important brand points, and potentially distribution centers, mini hubs, critically important.
I think companies are focused more on where the traffic is than the type of venue, whether it's open air outlet, they want the traffic. I think the square footage has become smaller, but the functionality of that square footage has to do more because the attachment sales from a buy online, pick up in store needs to go along with the service from the sales associates. One of the interesting things this holiday season, we saw fewer hirings of seasonal sales help, but you saw more hours allocated to full-time employees because they know the product and the customers better.
Interesting. I've been working with a startup. I love this one, a startup. It's called Reflex.
I know them. The temporary help.
They're the Uber of store associates.
Mike Tucci introduced me.
I love that, but it's so smart because it can really fill in those hours that are challenging to fill like immediately.
Right. And there's a 360-degree review that whether the stores, the customers, to know that these are the employees that can be very agile and work great within that environment for however limited number of days or hours.
You can get a 5-star review or a 1-star review. Just like
Exactly.
It's so cool. If you were going to lead a company today because you were changing jobs, which company would you want to lead?
That's a very good question. I mean, I like having the balcony view where I could look at a lot of different companies. I think that makes you smarter about knowing what companies should do right or should do wrong. I don't have a company I'd want to lead. I just want to always be the observer of the industry to better understand best practices of what could be done to accelerate growth and stay relevant. I think staying relevant, loyal to your customers, loyal to your employees, makes brands grow bigger. You can't fade in the past. You have to look to the future. And leaders like Fran Horowitz have done amazing at really reinventing and being relevant to a new customer group at Abercrombie, while now accelerating the growth at Hollister too.
It's funny. Maybe you'd prefer to be a landlord than a retailer. And I know you've put the miles in, maybe more so than any person I know. Dana Telsey has walked more mall miles than any mall walker, I think, in Florida ever.
Around the country, around the world, it's exciting. You know why? That's where you see it happen. And I always find talking to sales associates, more near the end of the day when they're tired, they'll give you the real picture of what's happening. And perhaps because I come from a family of sales associates, my grandmother worked at Bergdorf's, they understand what the customer needs and wants. And you can't just sit at your desk and read. You have to be able to be there. And that's why I like companies where you remember, probably like I remember, a man named Jim Senegal, who at Costco, he would have a poster behind his desk and basically like a little outline of himself. Because what was he doing? Walking Costco stores all over the world. And that ability for the sales associates and employees to interact with him, they knew what was important to him and he knew what was important to them. That tells a difference. I don't think there's anything better to understand a brand than walking and seeing reactions, both of the employees who sell the brands and the customers who are learning about the brand.
So whose store experience delivers?
I think there's a bunch lately. Look what Skims is doing. It's pretty interesting. They're delivering a great experience. Luxury goods stores. I mean, what LVMH has done It's delivering. You could look at Hermes on the higher end also. There's work to be done in department stores. That's needless to say. It's definitely Birkenstock. I mean, you look there and they're writing you, they're texting you about what's coming in. I think that's part of the David emphasis and being able to have distribution points through wholesale, but also through his own stores about what they're delivering. I think for what it is, off-price is delivering because of the vast assortment of brands that they have. They're delivering convenience. You have customers who will go in there every Tuesday and Wednesday when new goods come in. Value and selection, they matter. And you could look at other types of stores. Look what RH is doing by having the restaurant there. They're capturing the consumer to be in that environment and want to buy that merchandise for their homes too, to set up that same aesthetic.
Gary's done an amazing job at RH. Those stores are incredible. They do well. See how he does with the international expansion. That's expensive. You have a very different customer in each of the countries. It's not as leverageable in Europe as it is in the United States.
It's going to be interesting to see. And I also think he's taking all different size stores now because in the neighborhoods that he wants to be in, there is more demand than supply. So I think he wants to capture that customer.
Saks. So they've made the big move. They now have Neiman's, but it just seems that the higher end department store, just like the luxury online experience, there are fewer players. What do you see this move meaning for Saks and luxury, if you will, luxury department store business?
Well, overall, I mean, I don't know if you've been to Paris, but that La Samaritaine that LV owns in Paris of multiple brands is a beautiful store. I mean, frankly, that's what our Bergdorfs could be, given that we all miss Barney's on 60th and Madison, which was not only a hangout for clothes, but it was a meet and greet, especially with the restaurant on top, really showing the experiential that matters. In the spring, in New York at least, we have Printemps coming to Lower Manhattan, which is a little bit of an odd location to me of where it's going, because how do you make that a destination when maybe for some tourists, but a lot of the people would go there hard. Is there going to be, you need differentiation between Saks and Neiman's. You need a balance sheet that's strong to be able to invest in the store. Obviously, the Christmas lights were something that Saks was always known for. Are you going to have more contemporary at Saks, more high-end at Neiman's? But you got to be able to have the designers and the creatives really making a difference. You have to be able to afford that differentiation because what are you seeing the brands doing? Opening up their own stores. And frankly, many of them buying their own real estate. And we've seen that on Fifth Avenue, whether it's for Kering, whether it's what's happening with LV right now, differentiation matters and being able to provide that experience is different. Saks has to show a new Saks in order to improve the business with this combination.
And I think that's really big challenge for high-end and for luxury is that luxury has finally figured out how to go to direct to consumer. And at some point, they'll even develop good e-commerce businesses as well, but they're not quite there yet.
It's the relationships that the salespeople have that are the real touch points that lead to the repeat purchases. It's incredible what those relationships look like.
All right, we're going to close with rapid fire.
Let's go.
All right. Favorite place to travel other than a mall?
Europe for fashion, Asia for innovation, and there's nowhere else I'd like to spend more time than in New York City. It is the center of the universe for me.
Favorite streamed show?
Night Agent. Love it.
Person you'd most like to meet?
Sam Walton, the ultimate disruptor in retail.
If you weren't running your company, what would you be doing?
It's always been about retail for me. This is the only thing I'd be doing because I started as an analyst on the buy side, the sell side, and now with my own teams. I'm a store walker. I'm a student of the consumer, and there is no end for me. The journey continues.
This will be the toughest question yet. Favorite brand today?
Oh my God, I have so many, and you're exactly right. I mean, there are private brands that are really interesting, like Reformation. There is interesting brands out there, like luxury brands like the Row, Kite, Totem. That's really interesting. There is new fast fashion brands like Addicted. That's pretty cool and doing new things. And then you look at what an On has done. There's more room for On to keep going on.
And with that, we'll land this flight of the retail pilot. Dana Telsey, thank you for joining me today.
Thank you so much. Really enjoyed the conversation. Thank you for having me.
Thanks for tuning in to this week's flight of the retail pilot. And please give us a review on your favorite podcast platform.